Hey guys, welcome to Gold Rush Live. I am Jason. I'm your host today. I am joined by one of my really good friends. She's one of the most inspirational traders to my trading over the years, helping me get into the commodities markets, futures markets, and so on. Also, she has a great knack for timing things, understanding the markets, understanding the macro dynamics, and then not to mention getting in things just before everybody else. She's right quite a bit too. It's the reason why I started hashtagging "Don't Fade Mish" many years ago. So let's bring out Mish. Very excited to have her on today. So how are you doing today, Mish?
I'm doing great, and thank you for that lovely introduction. And just from my part, Jason and I met, I don't know, like about 6 years ago now. This is
Maybe
maybe,
almost 8, 9 now.
oh my goodness.
Time
Okay.
keeps going. Yeah.
Yes, it does. And yeah, and it's been a tremendous, well, sort of started out as a student-teacher relationship, but now
Mhm.
I would say we're peer to peer. So congratulations for all you have accomplished through the years, and now having this show and having me on. So thank you for that.
Of course. I mean, it's long overdue. I absolutely love talking to Mish. If you guys have seen my channel on Against All Odds Research, you've seen Mish's the first interview I had on there, and she has a ton of interviews on there. I brought her on just about every show I've ever done, and I'm excited to bring her on this today just to talk markets. I mean, there's
Yes,
so much going on right now,
so
and
much.
and nobody's better to talk to about it than Mish. And if you guys pay attention, go look at Mish's page. You've seen her on Fox, you've seen her on CNBC, you've seen her on all these different channels. And so we get to bring her out here today to talk about markets, and it's a pleasure for me to finally do that. So looking at this one, let's start with the dollar because Mish and I are both pretty big picture macro people. We start big picture and then we get into the micro and so on. Mish more micro than even I get. So starting with the dollar, like what are we seeing with the dollar? Everybody wants to know where this thing's gonna go. Is it going up? Is it going down? What are you thinking about the dollar here, Mish?
Well, one of the things that I like to look at is a monthly chart, because I get two different cycles here. And by the way, everything that I look at is all connected so that I get a story, and it's actually relatively simple. Believe it or not, it's going to look complicated because there's going to be a lot, but it's extremely simple. And sometimes when I really want to understand a longer term trend, to me, the best place to look is not only at the monthly chart, but the two moving averages. I don't know if you can see them very clearly. The lighter blue cyan line, that would be an 80-month moving average. That's like a 5 to 6 year business cycle, typical length of a business cycle. And then the blue line above that, forget about the Bollingers, we can talk about that later. So the Bollingers are the narrower line. There's a blue line there. Of course, my dog has to bark when I do this. Yeah. Hi, can I help you? I'm sorry, somebody walked in.
Oh, no worries. We didn't even
Okay.
hear the dog bark. There, it's good.
Right.
It's good.
Um, all right, James will take care of it. Ralph, stop. Sorry. By the
You're
way,
good.
my dog's name is Raoul, which when I do Real Vision, that's the name of, Raoul Pal. So I always like to tease him and tell him I named my dog after him. But anyway, little aside. So the 23 month is the other blue line there, and you can't really see it all that well, but that's a 2 year business cycle. And I love that because basically what it tells you of whether or not we're in a near term expansion or contraction in a business cycle or a longer term with the blue, the 80 month. And right now the dollar, you can see it where I have it highlighted. The dollar has broken down under the 80-month before, but it hasn't stayed down there very long. Right. So this whole idea of breaking the back of the dollar, I mean, yeah, if you're going back there, that's 2011 that you're looking at. That was when we had the big crash. That was the downgrade of the US. But since then, we've had gentle corrections in the dollar and not much more than that. So while everybody got really super bearish, including myself, right from the highs, what we're seeing right now as we're ending July is we're right at that 80-month moving average. We're going to get a new bar in there tomorrow for August. I just wanted to show that perspective because let's call that 100 as the line in the sand. If we're going to go back over 100, then I'd say there's a really good chance we're looking at 105 next. If we start to roll over 100, then all we did was rally right to major breakdown resistance And then we can see our way back down, maybe even closer to that 90 level that we had in 2020 and 2021.
No, I love that. And like you said, those old highs, part of it was at that time we were seeing this crazy positioning. If we're looking at the hedge funds, they were so long the dollar at that point, and it just kind of had to roll over. There was no more people really to buy this thing at that point. And you got the commercials, meaning smart money started going short. So we kind of saw that massive drawdown. Then we broke that 100 level. So I love that you brought this chart kind of highlighting like either it's kind of a make or break point for the dollar. You also brought this chart, which is just looking at a daily chart of dollar futures. So what are we seeing here, Mish?
Well, we broke out over the 50-day moving average. So that was the clear, well, first of all, we had a very clean reversal pattern. And I'm going to put my glasses on so I can see as well. We had that very clear reversal pattern, right, as you're pointing out there at the end of June. And that's the kind of thing I love is when you see a new low, maybe an inside day or some digestion the next day, and then you start to go up. That's a pretty good sign of a mean reversion type trade. This is a very simple chart. We just have the blue, which is the 50-day, and the green above that, which is the 200-day. So now we've had this great rally and we've had a phase change and we're in a recuperation phase. And that's why we're going back to the monthly. This could accelerate into something more. We don't know. Or it can just sort of roll over. If you look to the left, you'll see all that resistance that we talked about at 100. Yeah, right there. We had that one blip through it, but it failed it, trading against the 50. So we could be in a whole new world with the dollar. It could be up. So what does that mean for the market? I mean, that's kind of where I'm really intrigued. We saw that when the dollar had its last big rally, it didn't seem to impact gold very much. Gold was still going up, but it did impact some of the other commodities. So we're going to look at that. And in terms of equities like not such a strong dollar, a weaker dollar, and certainly all the emerging markets that have done very, very well will have a little bit of a tougher time if the dollar gets stronger. So, good for travel. If those of you who've been waiting to go to Europe, because now all of a sudden it got super expensive, it could get a whole lot cheaper for a lot of reasons, by the way, not just because of the dollar getting stronger, but also the fact that airlines are not doing very well. The whole tourism industry is pretty pathetic.
Oh, yeah.
Yeah. So
And so getting back to this one real fast,
Yeah.
I just wanted to
Okay.
ask you another
Sure.
question. So we're talking about equities, and this is something that I've been thinking about too, which is, okay, let's say the dollar gets back up here and we get back up into this box zone. We were calling this in the box, basically
Mhm.
between that 100, 107 level. So do we think that, just in that level, let's say it just chops around there for a while, do we think that would put much pressure on equities? Or are you looking at like maybe if it starts to actually really break out, that's a point where we'd see a lot of pressure on equities?
Well, right. Look at what happened the last time the dollar started rallying after COVID. That was really basically the top of the market at the end of 2021 into 2022. And then what was so interesting is the dollar started coming off even before the market bottomed out. So the dollar is not necessarily a lead indicator. So let's get that straight. And the relationship between the dollar and the markets and commodities is not 100% pure. There have been times when everything's rallying, including the dollar. There have been times when it's been counterintuitive. So, and there's been times when the dollar has been weak and the market is weak. So you don't really, I don't count on it. I just look at it for information. And if you're a currency trader, it's good to know because the dollar pairs have been really in the favor of the foreign currencies. I was all about the Swiss franc a year ago into this year. And now, of course, I would be much more cautious until I see what's next for this good old greenback.
Yeah, I mean, you guys have heard me say that a million times. That's straight from the source. That's where I got it from. Understanding the dollar, the relationship to equities, commodities, and so on changes over time. Very important to understand. So let's keep on rolling through because you brought so many good charts. I want to try to hit all of these before we go, and I'm sure you guys all love charts, so I'm going to just kind of roll through them. So Ethereum, US dollar. So this is one that was dead. Nobody wanted it. Nobody wanted to buy it for a long time. That's usually when I see something from Mish getting excited about something. This is dead. China basically was at the bottom. Nobody in the world wanted to buy it. I remember even saying myself, I don't think I could buy this Mish, and Mish is like, no, I think it's going to bottom out. I think it bottomed right after.
I bought
Uh,
Baba at I think it was $89 or maybe it was even 79. Yeah, it was the low. It was the low. Yeah.
yeah, I know
Yeah.
my strength, and I know Mish's. Mish is very good at picking bottoms. I'm better at trends. That's my thing. But Mish is great at picking bottoms. There's nobody I've ever seen do it like Mish. So looking at Ethereum, what were you thinking here? Are you thinking that this thing's got higher to go? What are you thinking about this chart?
Well, I didn't really pay much. I actually got out of all my cryptocurrencies that I had in the beginning of this year in 2025. In January, February, I was flat. And I stayed that way for months. I'm an incredibly patient person when it comes to things. In fact, the only time I get into trouble is when I lose my patience and I get into FOMO. And that's when I know it's time for me to take a vacation. Really, because I get saturated and I start making decisions outside of what I know in my brain should be smart decisions. And so when did I finally flip on this? Really, basically, I saw it break out over the 50, but I still didn't really do anything about it. I think I bought Chainlink instead of Ethereum down there because Holden, who was our crypto guy, he doesn't work for us anymore, but he was like, just sit on Chainlink. Chainlink's going to go up. Just buy it. So I bought it down there and I actually got out and then I did nothing again. And then all of a sudden I noticed the golden cross. Look at that beautiful golden cross when the 50 is now clearing the 200. I love my phases. I love the little period of consolidation. Below that, what you have is our momentum indicator all the way down, 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 down. Go down. Yeah, there you go. That's our real motion indicator. That is a proprietary tool that we have at Market Gauge. It comes from our floor experience where you are able to experience momentum through your senses, right? You can see it, feel it, hear it, taste it, smell it at times. But this, we needed some way. And so they programmed this indicator and it's fantastic. It uses a series of dots, also a 50 and a 200-day moving average. We have shorter time frame ones too. And notice that this started crossing in momentum before the price did. This started clearing the 50-day moving average and we got the golden cross before the price did. So once the price did, it confirmed a bullish divergence in momentum. And then I saw some volume coming in and I bought it. And I went, by the way, on Schwab that day right before it. And she said, oh, I see you like Ethereum. And I said, Nicole, I don't like it. I love it. And I don't say things like that very often. If you ever hear me say something like that, it's a pretty good chance that I feel that confident. And so there you go. Through 25.50 off she went. And now I'm flat again. I got out. I got out at around 37.50. I didn't catch all the way to the top, but that's okay. I'm not necessarily convinced this is over, but as we're going into a little bit of summer doldrums here, I wouldn't be surprised to see a period of consolidation, maybe a couple of moves down. All the great news for this market is in there now. All the mass adoption, the work with stablecoin. I mean, I love Ethereum still, and I think eventually this will take out 4,000 and go, but I'm all about the timing. And we can see the momentum, right, is starting to wane a little bit. It peaked right at that top, hasn't had a mean reversion yet. That would happen when it breaks that dotted line, that blue dotted line. That would be your Bollinger Band. But I'm going to be a little bit patient at this point. So we'll see.
So, Mish, I want to also ask because this is something I talk about a lot, but I'd love to hear you actually explain a little bit more. So, you're talking about summer doldrums. I know like you always go on vacations in I think August because I
Right.
always remember it's kind of around my birthday, and then a lot of traders like also go on vacations and take time off. So, can you explain like what you mean by that? Like, does it something that less volume in the market that makes the market move around in bigger ways. Like, let's say that copper move might have not happened to that degree if it was December. Could you explain that a little bit more?
Well, that was also partly headline driven.
Oh, for sure. But
Yeah.
just
And
saying
we've
like the less volume might make it move a little bit more than it probably maybe 15%, maybe 20% in the summer.
Right. Well, I think it really I've always taken vacations in the summer, and I think it starts from the fact that as kids, in school, we had the summer off. So I don't think we ever really get through that, even as adults, and especially as adults with children. So I think part of it is just cultural. The other part of it, of course, is that seasonally, and if you look at Jeff Hirsch's work, the Trader's Almanac, he'll agree with this. Seasonally, August tends to be a weak month. But it really capped for me in that August of 2011 when we had that downgrade. I went on vacation, sold everything out August 7th for all my clients because I wanted to go. I don't always do that, but this time I was just like, I wanted to just clean my head out. And then we had that major crash. So I just feel like we have a lot of elements for that right now. So I'm calling it doldrums. May not be so dull. It just means doldrums or pause maybe from the massive fun rally we've had since those April lows. And I don't mind avoiding that noise during this particular month. And yes, I am going on vacation August 8th till about the 23rd. So
Sounds about right.
yeah, I'll close out my positions most likely. Maybe I'll keep a couple of things that are in the money with stops, but that would be about it.
So when you were trading on the floor, did you also see a lot of people taking vacations in the summer?
Yes, absolutely. I mean, we're talking New York, right? So the Hampton scene, that's where you found all the traders in the summer was in West Hampton and Southampton and East Hampton.
Nice.
So
But I always love to bring that stuff up with you because nowadays it's like getting people on with real floor experience is hard to do. And I feel like I learned so much from you and other floor traders over the years, and even my great great uncle, like having these experiences or talking, like you said earlier, you can taste it, you can smell it. Sometimes you can even smell it, like you said. Like that's something that most traders aren't going to understand. And you guys look at the price, and like I've learned through you, not even the experience, but through you all to look at the price and kind of see what the people are doing. Do you still think that you lean on that pretty heavily? Like when you're looking at price action, FOMO, whatever you're seeing in the market, do you think of like what would be happening on the floor?
absolutely. I mean, that's no doubt about that. The only difference now is I have access to looking at news and things, which of course on the floor, you were just in the pit the days before cell phones and social media. So I didn't know what was going on. I would hear from people on the phones, the clerks that were talking to brokers upstairs, but it was more like who was coming in with orders to buy and who was, it wasn't really, I mean, we'd look for the OPEC plus when we were trading oil. At that point, it was just OPEC meetings, but we were already positioned long into it because what you learn on the floor is price dictates the narrative. And I 100% believe that. And so even though we've had more volatility with a very vocal administration this year, you still overall might have had some gyrations, but overall you can see where the price dictates the narrative. And that's what makes us talking today so exciting because we're going to see a big shift potentially happening in the market right now.
Ooh, interesting. Speaking
So
of big
this is
shifts,
gold. Okay. So
speaking
I've
of
been
big shifts,
right. Okay. So I've been all about silver for this entire year, maybe starting into last year.
yeah.
I got out of silver this week. I got stopped out of
Ooh.
silver because I run a trailing stop. So I mean, I did great in the trade. And if I were still on the floor, I would have been much more actively trading, but I don't have that kind of time now. So what I do is I keep moving up my trailing stop. And so I had originally bought silver, I think down at around 20, and I've traded around that position. But when it couldn't get through 40, I was like, okay, it's time to really jack up that stop. So I put it in if silver broke under 38, which it did, right? So now I'm like, okay, well, what do I want to do now? Well, silver, if you look at the silver chart, you'll see it landed right on the 50-day moving average. But somehow right now I'm more interested in gold, even though this is below the 50-day moving average. And I think the reason why is a little bit fundamental. I think we're going to see a little bit of a rollover in all of the markets. Again, all the great news with the earnings might have been the blow off, right? Microsoft and Meta. And I know we have Amazon still to report and Apple, but still, I think we've seen potentially for now a top. Again, not bearish. So that brings me back to gold because it's been the classic flight to safety. It started to underperform silver from the peak of the ratio because silver was starting to rally for more economic growth reasons. And now with yields coming down in spite of what everybody thought would happen, hasn't really done what it needs to do yet, but it still could. Pressure from the administration to lower the rates. We may find out that Powell was a bit late in doing that right now. It's very possible. Gold could really get a benefit from that. And I think we could see that gold silver ratio flip back in favor of gold. So I'm looking, you could see there's great support here down here. This is kind of what the correction was that I was looking for, which was around 3,300. If we break that, maybe 3,200, but I would be a big buyer at 3,200. And if we don't break 3,300, then I would probably start. We have an inside bar day today. I would probably start to be a buyer if we get above, let's say, wherever we're trading right now, which is what, 33.42. So at around 33.50.
So Mish, you always mention 30, you say numbers and you go, that would be a gift. Is 3,200 the gift?
Oh God, yes.
That's
Yeah,
the absolute buy for gold.
I think so. I mean, I know there's a lot of gold bears. They're talking about all these tops, and yeah, those tops are definitely something to reckon with. We have like 4 tops up there, but I don't care. I mean, to me, that's just the nature of where it was. I'm looking forward, and I think that 3,200 and everything fundamentally that we have going on, we still have some issues, and they haven't resolved yet.
Yeah, I think I'm with you on gold. I think, to me, there's a couple different types of corrections. You either get a big drawdown or we're correcting through time. Correcting through time is usually the best one. And I think this is just flagging, and we could possibly see this move higher. So I also agree with you there.
Well, there's your box, Jason. You like to talk about a box. That 3,300 is sort of the bottom of the box right now.
Yes. Yeah.
So you always want to kind of, but you got to be nimble. You've got to be so nimble in this market with everything, I think. I mean, I know that's opposite of what everybody hears. Oh, just buy and hold and sit forever. You'll never lose money. It always goes up, the market. And, certainly that's been true. And this year has been a spectacular example of just follow what everybody else wants to buy because you're going to make money that way. But we know nothing lasts forever, and eventually that could change. So I always keep my discipline no matter what.
Yes, and that's what I love talking to you so much for, and what I learned so much from Mish. Like moving into futures markets from stocks and ETFs was tough, and for me it was sizing issues and figuring that out. And I would ask Mish, "Hey, what's the secrets to this?" And Mish would send me another book on position sizing. And honestly, it was everything. So like at the end of the day, like that was the biggest secrets to trading is understanding position sizing well. Like I also use trailing stops, like Mish was talking about, understanding like how much you would lose if every position in your portfolio went to a stop. All these things are incredibly important. And Mish has learned this through experience for many years. And so I'm very happy to have her on today to talk to you guys more about this stuff. But coming up next, we got silver. You were just talking about silver, so do you think it's just kind of dead money here for a little bit, consolidates or lags gold once again, because it was leading for possibly the last year. Year to date, it's been leading. I think at some point it was up 36% and gold was up 30. I was surprised to see that finally. So what are you thinking about silver here? Just dead money or not?
Not dead. I mean, let's face it, I still like silver a lot. I just think that maybe some of the fundamentals have shifted, which could put gold back in favor. Like, for example, I know that the Chinese really were accumulating large amounts of gold, and they kind of step back a little bit, and that could start again with these cheaper prices. I don't know if they've necessarily been accumulating silver. I think most of the silver move has been made by the speculators in this country. If I had to just make a guess, I don't have exact evidence, but just the way the market has moved. Now, one thing we know about silver, when it looks like dog do, it's been the best buy. And when it looks like it's about to go to the moon, it's been the best short. And, back in the day when I was trading gold and silver, it was the opposite. Things were going parabolic and buyers were coming into strength. And we haven't really seen that in either of the metals. So what I'm looking at right now is in silver is it could do some work, right? I think 36 is huge. I told you I got out under 38. 36 between 35.50 and 36 is huge, really huge. This thing broke out through 34. That was my breakup area. But I think look at how much work we did between really basically 33.50 and 37. We spent quite a number of weeks there. So I don't think we're going straight up or straight down from here. I think we could just chop for a while. And a lot of it will maybe depend on the dollar. And a lot of it will maybe depend on what happens with yields. And a lot of it will also depend on what happens with tariffs and what will happen because we have the August 1st deadline coming up. And also, silver is very high demand in solar. It's used, still a conductor, not as much as, let's say, copper. So also what happens with the economy is going to be a factor here too. And that's where we'll look at the modern family. So I'm kind of like not into this right now, but I watch. But that's why I say, that's why I've got my eyes more on gold, because that could supersede all of everything I've just said and go up on its own.
No, I love that because I think everybody's looking at silver. We've seen the miners have a crazy year. Still, even if you look at it, I'm sure they're well above and beyond any of the spider sectors this year. They were hitting 60%. They're probably pulled back to probably 50 or something right now in GDX and GDXJ. But I'd like to see silver has to continue to move if that's going to be the trade. I can't see a situation where the miners continue to move if silver starts to become a laggard. So looking at this next one, this is natural gas.
Natty, the
Yeah,
Widowmaker, as
natty.
people say.
The Widowmaker, as people say, but as we know, as you know more than even me, which is it's all based on position sizing. It's one of the most volatile products in the world, so you got to trade it like that, which means you got to size your positions smaller to do so. So looking at this chart, what are you seeing here, Mish? Once again, I'll just say this once again. Mish is very good at picking bottoms. Very hard to do. Not many people can do it like Mish. So let's see what you're thinking here.
Right. And by the way, this actually now, Natty went up to like 310. I've sent these charts to Jason before that happened. So keep that 320 in your mind, because I think that's going to be the confirmation of the real bottom. But, go back to the very beginning on the left, go far left, far left, far left. Yeah, I mean, we had this thing, it just looked like it was going to die. And I started thinking to myself, I did not buy that rally, by the way. But I started to think to myself, gee, this thing seems so undervalued here. And from a fundamental standpoint, it's kind of like the opposite of what we said about uranium. I love the fact that we will eventually have clean energy through nuclear energy. And I have a lot of friends who work at the Los Alamos labs here in New Mexico. And those scientists all say that they've gotten a lot better at it's much safer than it used to be. They're still working on some of the storage issues with storing it, but there's still natural gas. And I also live, by the way, in the state of the Permian Basin. So I've been talking to a lot of oil and gas guys. And interestingly enough, they were far more bullish in natural gas than they were in oil, even though oil's made a bigger pop right now. And so that got me thinking about it. And right now, if you're going to power these AI data centers, this is still the cheapest source of energy in terms of the product. Getting it, though, out is what's expensive, right? The pipelines, the distribution of it. We export in New Mexico a lot of natural gas and a lot of oil. We are the second largest producer of both, behind Texas. And of course, we border Texas, so the Permian Basin does. So I started thinking, I'm talking to these producers and they're saying to me, we're not going to produce with the natural gas this cheap. It just doesn't make economic sense. All the cost we cannot pass on to consumers if the product is so cheap. That's when you start to see hedging in the futures markets, right? That's the whole nature of commodities. So that's what gets me interested. After that, I like to look for historical lows. And now today is the day we are getting a legitimate reversal. So can I see where actual natural gas is right now so we can talk?
Yeah.
All right, hold on. Let me go look here real quick at natural gas. Refresh. Okay. So right now it's trading at 308. So basically what we're having right now after yesterday's low is an inside day, right? That's perfect for me, because what that tells me right now is that we may have seen the bottom. We're getting some kind of digestion on a green day. And if we can get through the high of yesterday, which is 312, not that far away, it's only 4 cents, but that can be a huge difference. That's going to confirm to me a reversal bottom with a really cheap risk. Now, where does it go? The last time we had that kind of reversal, look where it went. It went from 3 all the way up to what, 520. So that's a huge, that's almost a double.
Mhm.
So that's, I don't know if I'm even looking for that much. I'll be happy if this thing can get back up to 4. That last spike that we had there in July. See that spike up to, what was it, 420 right
Yep.
there? Yeah, I would be happy if we can get to 4 to 420. A dollar move in the futures is a nice move in the ETF, if that's what you're trading.
No, I love that because it's kind of shows you something, and this is something that Mish does so well, which is it reminds me of that quote in Market Wizards from Paul Tudor Jones. Jack Schwager goes, "Oh man, it's great, like you catch the market at the top. They run these magazine articles about you. Paul Tudor Jones shorts the market perfectly at the top." He's like, and Paul Tudor Jones says, "Yes, because it wouldn't sound as good to say on his fifth attempt, Paul Tudor Jones shorts the market at the top." And so, I want to talk about your risk management because there's a lot of traders watching and they don't, they'll buy this and then it'll fall and they'll just keep buying more and trying to do it. So, what do you do? How do you risk manage these positions? Do you take a second entry if you get like a similar signal once again? Or do you only take it once and then kind of go from there?
Well, I basically, if when I have a lot of time, I will do exactly what Paul Tudor Jones was talking about, which is probing. That's
Mhm.
what you do as a commodities trader. You probe, and you don't mind if you lose 5 times in a row.
Mhm.
Like just like he said, that doesn't make for sexy press. But what it means is that if you've controlled your risk and you probe and you get out, I didn't hit it yet, I didn't hit it yet, I didn't hit it yet, and then you hit it, that's where the home runs come. That's why he's a billionaire, right? And actually, he and I were contemporaries on the floor of the commodities exchange back in the day. I was just a young 20 something year old at the time, but he was a legend then because of his incredible discipline and his incredible ability to see the bottom of markets. So if he went into a pit, everybody rushed into a pit, right? But anyway, getting back to this question. So what I would do, so if I bought it, and let's say I bought it at in anticipation, or when that actually broke out, let's say in June, where it broke out of the 50-day moving average, got in at whatever that was, 350 or 380, does that say? But I wouldn't have gotten out right away. But as soon as it breaks down back under that 50, and then that same day 200-day moving average, I take my small loss, and that would be the end of it. Then when it finally touched back on that 50-day moving average a couple of days later, I probably would have said, "Oh my God, this thing is going to go now," but it didn't confirm. I like 2 closes over that major moving average. So now I'm looking at it for a completely different reason. We're so far from the moving average. I would probe, like I said, if we can get through 312 or we gap above it tomorrow on a Friday, I would put my stop under today's low. And if I'm get out, I get out, no biggie. I lose maybe 12 to 15 cents, and I would keep doing that. And then if it gets through 320, then I know I have a better opportunity, that kind of thing. And I would, in position trading, probably do a starter position and then add as we start to clear. Because if we get through the 50 and the 200 this time, considering everything that's going on seasonally, by the way, natural gas, this is a good season for it, then then you got yourself a nice little trade. It's so individual. So individual. I'm already long a little bit, on a little underwater, but I gave it some room because I knew this was so oversold. I actually might do something I rarely do, but that's add to a losing position. But I will really honor my stop at that point. So I'll lose the initial loss in the first part of the position and a very, very small loss in the second. And if I'm not stopped out, I'm now averaged at a much better price.
Yeah, that's why I wanted to talk about it because you're able to break that stuff down and you have such a knack for teaching people things. And so just understanding how that works, how to do it, I think that's a great valuable lesson for every trader watching today. So thank you for that.
It's not good for beginners, though. I always say don't add to a losing trade when you're a beginner, right? Because, that you don't know how to do that. I've just been doing this for so long. It's that steely discipline that really gets. Okay, so now you're looking at UNG. Oh no, that's TLTs. Let's go back to
TLT,
UNG.
yep.
Yeah,
Okay.
go back to UNG. Just real quick.
Yeah.
Because this is how most people are going to trade natural gas. A lot of people, especially our clients, in fact, some of our clients can't even trade UNG because of K1 issues. But That bar that you're seeing is not right. What we're seeing now is a bullish engulfing pattern because as I'm talking to you, on is at 1384 or 64. God, my eyes are also not really all that great. 64. So that means we're above yesterday's high. We have a bullish engulfing pattern in UNG. Not as sexy looking in the futures. That's why you always check the underlying. But still, that's going to be a nice buy opportunity with a stop under today's low. It's that simple. The red horizontal line you see, now we're going to introduce you to my stock charts, is the July calendar range low. This to me, when you talk about cycles, I'm all about these calendar ranges. I loved them in January and I love them now in July. In January, as you'll see as we get into the Modern Family, we had some breakouts that were false, and then in February, everything started to roll over into the April trough. Now, just the opposite with commodities. You could see natural gas never got through the January high. It waffled around between the January low, never got through the January high still. Then it broke down under the January low. Now we have a whole new reset. So we have a new low, the July low. We haven't gotten through that yet. So another thing to do would be to put that into a futures chart and buy more if we clear back over that July low.
No, I love that. I think the January range, you talked about that for years, which is when we're looking at the S&P 500, I know you're always looking at that. When we break below that, it's time to be bearish. When we are holding that range and we break above that range, it's time to be more bullish. So I love that little lesson there with natural gas futures, because that works for everything. Like
It works for everything.
it's
And
very
notice,
significant.
look at the 50-day moving average there, that blue one. It's right in line with the July 6-month calendar range high. So, those are the kinds of things that I don't know if it'll get there, but that excites me. I love when we see convergences of indicators.
No, I love that. And so ending off the energy complex with crude oil. So let's talk about crude oil. This is one that, I know you and I have both had some ideas about this one, looking at XLE, looking at crude oil. So what are we seeing here now? It's, thinking about all the volatility that's happened in the last week or so, and then looking at crude oil is kind of just shrugging it off. Even after that huge move, which was very news related, you and I are both kind of the same about when you see breakouts on headlines, it's kind of a that's probably going to come back into the zone once again. But now, what do you think about oil? Do you think this thing's ever going to start moving again? Do you think it's just going to go sideways and frustrate us all till the end of time? What do you think about crude oil, Mish?
Well, a lot of people would have told you it's never going to get back to $70 a barrel. It was
Yep.
going down to 50. That's always when I get the most interested because that's when I go, okay, why? And then when I realize there's two very separate camps in terms of this administration and oil. There are the camp, and these are oil guys that I know in New Mexico who say that the pressure he's putting on the Saudis to pump, 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 knowing darn well that he can't really say drill, drill, drill here in this country for the same reason we just talked about with nat gas. Producers do not want to drill if it goes down below $64 a barrel, especially the smaller producers. Some of the bigger ones, I think, can basically still make money to about $60 a barrel. But still, so you have on one level people thinking really negative because Trump is going to put the pressure on the Saudis. He went there, he had that great trip, and very strategic. If they continue to pump, 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 that would definitely put pressure on the oil prices. However, A, that hasn't necessarily happened yet, and B, demand is stronger than what people thought it would be. And again, if we're looking more domestically at the Permian Basin, the rig counts have gone way down. The amount of oil that's being produced is way down compared to about a year ago. I keep that in my head, right? So that doesn't mean that I'm madly bullish in oil, but it certainly meant that we bought XLE instead of oil, but I have bought oil this year and made money. I bought right before the Middle East conflict. For exactly all the reasons I just told you, I didn't even know that that thing was going to happen with Israel and Iran. And I was long at like $60 a barrel, and I wrote it and got out that long, big red candle because I had my trailing stop and I got out. So, that was just luck. That was more being lucky than being smart. But now, it come back up in the face of everything. So that tells me there's some really good potential here. I think that if we can hold above 68, that's my number, $68 a barrel. We can hold above that. Anything could happen. Is the Middle East situation completely resolved? We don't know. I mean, it's really hard to say, but I would not get negative in oil unless we break down under 68. And if we can really hold above 70, I don't see any reason why we can't get to 75 or higher.
Yeah, I agree with that. I think that oil's, so many people wrote it off. I was just talking about the chart of XLE the other day. You see all these false breakouts again and again and again. And finally, I feel like there's who's left to really be bullish on this thing. Everybody kind of hates it. Everybody keeps getting frustrated by it. And that's the time where, yeah, same here, but as well as I know, most of the time when we're both like very frustrated about it, we're going to probably take the next trade because that's usually the one that works. And so I do think we're kind of in that zone with oil and the energy sector right now as a whole.
Yeah, I didn't send you the chart of XLE, but we bought it at around 86.20. And it hasn't broken out completely. If it gets through 89.50, 90, that's a pretty massive breakout. And again, just think logical. It's logical. If we're going to have all this demand for energy, and XLU, the utility sector, has done extremely well, not necessarily the way it used to. You do well because the market was doing poorly, so people went to safety. It's doing well because the grid system is stretched as can be, and this is only adding to it. And the whole bring it back to America is going to add to it more. You need sources to get through these utilities. It's almost mind-boggling to me how undervalued gas and oil is. Uranium, like I said, made the big move because all the younger people were like, yay, clean energy, future. But it's future, it's not here yet. So I've already speculated in that. Now I think the time is to speculate in the actual real energy because we're going to need it.
No,
That's my that's my opinion
I
anyway.
completely agree. No, I completely agree. I think that's going to be something significant. I think it goes right with the AI story, everything. I think it's a very significant thing to talk about. So we'll get to the Modern Family just after this. We probably got about 10 minutes. So let's get through these. But I wanted to bring up TLT. You keep talking
Right.
about bonds. I know you and I are kind of on off sides in this, and I think it's more time frame. So I'm wondering what are you thinking here with TLT? Are you thinking it's a short-term move, long-term move?
All
What
right.
do you
Well,
think?
first of all, let's go down to the very bottom of the chart. That's the real
Mhm.
motion. There's my momentum indicator. Notice that the 50 and the 200, the red dots are trading above it. And the 50 is fast, very greatly approaching that 200 for a golden cross. Remember, I showed you another chart before. I forget which one it was. Oh, yeah, it was Ethereum, where we
Mhm.
had the golden cross. And the real motion indicator was above both moving averages long before the price. Now, in this case, the bonds are over the 50. They're holding the January calendar range low. It almost looks like a double bottom from the last peak low we had in May to the one that we just had more recently. And so it's the momentum that's getting me interested here because it's telling me the momentum is starting to show signs of life in the bond market. So I don't really care at this point what Powell says. We know we had two dissenters yesterday at the meeting. We know what Trump wants. And so far he's had a pretty good track record of getting what he wants, which is why I'm so split on the oil and gas side, not so much the gas, but the oil, because I know he wants cheaper oil, but nonetheless, we'll follow the price. In this case, I actually really agree that he is going to get his lower yields. It makes sense. The second largest expense we have in the United States of paying the government is the interest on the debt, and we have a lot of debt. And the higher the interest rates, the more stressed we are. And that's why we keep adding money because we need to pay that off to keep the government going. So, for all these reasons, I think that this could be the great fade trade. And yet I haven't really jumped in yet because I don't know. I just want to have a little bit more evidence of it. And again, also, I'm kind of thinking, I'm going to sort of take off a little bit here. So I don't want to get too involved in something as volatile. But look at that January calendar range high. If you look at the one behind it, to the left, that's the January calendar range high. And we were above it, and then we failed it, and then we failed it again in May, and we never got through it. Now it's almost perfectly in sync with the July one, and right above that is your 200-day moving average. So even if I have to pay up for this, I'm okay with that. that would be more confirmation that this massive box, as you like to call it, has been an actual giant bottom and yields are going to go down.
Yeah, that's the thing to me right now. It's more like we just need to see the evidence. And if the evidence was coming in, I would change my mind. I'm still thinking the long end of the curve, possibly higher yields until something happens.
Yeah, I
Uh,
probably should have sent you the monthly chart. That would have been really interesting. That thing, when that broke down, I mean, it was obvious that the bonds were going to, the yields were going to scream higher. And that
Mhm.
was back in 2022. Even before that, it broke the 23-month and the 80-month. Since then, we've been trading below the 23-month now for a long time. And that comes in at around 92. So, like I said, even if you don't get in at the bottom, this is one that I don't feel like I need to pick the bottom. I rather see the evidence of it because if the yields go back down and this breaks out over 92, we are now reversing a 3-year cycle to go back into a possible period of lower yields and TLT in a growth cycle. So, and there's a long way up between the 23-month and the 80-month that comes in at 121. We don't even have to go that far. It would just be a nice trade.
No, I love it. Let's move on to the modern family. So
Okay, yeah, let's do that because I think we've talked about a lot of commodities here. So you can see, watch the energy, watch the oil, watch the gold as the flight to safety, maybe silver, not so much. We didn't even talk about copper. We don't need to talk about copper right now. So you can kind of see what I'm thinking about. I also would keep my eyes on DBA, because DBA has been basically under pressure, but that could always get interesting. But let's go to the modern family because this to me is the macro right here.
Mhm.
So again, let's go back to those calendar ranges. On the left side of the chart, you have IWM, that's the Russell 2000. If you look at the SPYs and you look at the Qs, we are way through those calendar range highs, right? But we were also in January. I didn't give you that much history. You see it a little bit in XRT, but in January, everything started out well, new administration, everybody was optimistic. Oh, the market's going to scream higher. And IWM started to roll down. So did XRT, so did IYT, and SPYs and Qs eventually followed. It took a little bit longer for the Qs because of the growth stocks. But that's when everybody was buying NVIDIA at the highs, and I was getting upset about that. So right now, what we are in a situation is where it's not horrible because the momentum is still looking pretty okay down below. The red dots are still above both moving averages. But it's a little bit frightening that we can't clear that July high in IWM. If it hangs out here, great. But until we actually see a really good clear or we go down and test the low in the 50 and we hold, I'm kind of like, sort of agnostic on the market right now and again, it goes back to the seasonals. And if we move over to XRT, that's far worse. Again, Granny Retail never got through the January highs convincingly, looked like it was going to go through the July highs, and now, of course, has failed. As I'm talking to you right now, it's still down on the day, so we're going to get into some really critical support. I wouldn't get negative the market, I mean really negative the market, unless Granny broke down under the 6-month calendar range low, that red line under the 200, which corresponds with it completely. And the momentum starts to break down also under those lines down below, which right now it's holding onto major support. So we have to hold here. We could rally from here, but if we can and we roll over, first clue, maybe we're in for a bigger correction.
No, that's perfect because to me, this is like something that you taught me, something I use all the time. People hear me talk about it, but understanding the inside of the market. You're so good at this. So now we're looking at transports. We're looking at semiconductors. Semiconductors have been really resilient. Transports, not so much. What are you thinking about here?
Well, let's look at this. This is such an interesting looking chart because if, again, let's start at the bottom is the real momentum, and it's sitting right on the major moving averages. It's a make or break. At the same time, the price is sitting right on the 50, the 200, and the July 6-month calendar range low. So with the three groups of the IYT, XRT, and IWM, they sort of change leadership. I have seen IYT after 2008. IYT and IBB bottomed first, interestingly enough. And I was like, okay, things are starting to move again. And obviously IBB would be a sort of a separate thing, and we'll talk about it. But now we're seeing, how could this is part of the tourism stuff that we've been talking about, airlines sort of suffering, but this is also related to the consumer. And we had terrible earnings come out of UPS this week. So if this starts to fail convincingly from here, it may take the others a bit to catch up, but I certainly would not be a big buyer of equities if that happens. And that includes the growth stocks. And if it holds here and starts to move up, maybe this was just another shallow dip like we've seen. Semiconductors is even more fascinating to me because today, as we're talking, semiconductors are now back underneath the calendar range high. So with all these great earnings and all these AI generated companies that run on chips are failing right here at the highs. Another big sign of caution. If semiconductors really roll down from here, then all the weakness we're already seeing everywhere else will only get weaker. Everybody thinks that value is going to lead. No, it's not going to lead. It's not going to lead. Growth is going to continue to lead until one day when we really have put ourselves in a situation where our economy is booming here in the United States. We still haven't seen that yet in tension, but that's why the Modern Family is so important. Semiconductors being a part of it. If that can rally from here, everything else holds up, okay, that would be fine. But right now, what it's suggesting to me is the market's tired. And even the growth area is starting to look tired. And even NASDAQ is down on the day right now, which is kind of interesting.
Yes, but the one thing I wanted to add, Mish, and we probably have to go in a sec, but something to just talk about right at the end. Thinking about, you've always taught me like history is always important, like looking at market history. So I'm a big student of history and looking at like the Nifty 50 stocks, talking about the 50s, 60s. And like you just said, like you get this rotation and you keep mentioning earnings. Hey, we're seeing these great earnings. That's a thing that happens almost every time when we're near a cycle top is you have these amazing earnings. Everything looks amazing. It's never going to stop. And then it stops around those periods of time. So are you looking at more of a, let's say rotation into maybe a more stagflationary cycle, rotation into something else, like out of these big tech and AI names into something else? What are you looking for right now before we go?
Well, it depends on how severe a crash might be. If we get like a really good drop, like a 10 to 15% drop quickly, everything will go down. We've seen that over and over and over again. But if this is just going to be sort of an August lull where we roll down and it's controlled and we don't see great volatility because the volume is not there and people have sort of maybe evened up a little bit and are walking away, then I would really be looking at some of those commodities that we talked about, the energy space in particular, the gold. We didn't cover sugar. Let's cover sugar because that's, I'm always so famous for sugar. And we'll leave out the rest of the family. All of them look like this, by the way. They all look like they couldn't get through the July highs. They're flirting with the July lows, except for biotech. That's the only area that's still above the 6-month calendar range high, which is interesting because that's been a lagging sector for years. That could be another rotation, by the way.
I think it's the only chart that I somehow didn't get. I literally grabbed all of your charts and I think I missed sugar. So for you guys, I will
Oh,
post it on my channel when we get done. But let's talk about sugar.
all
Let's
right.
just talk
Well,
about sugar real fast. Bring up oil,
okay.
a little bit closer to sugar. So what do you think about sugar and why do you, importantly, why do you look at sugar so much? You've talked about this before, but like, let's tell the audience, like, why you look at sugar.
Well, partly because in 1979, 1980, when gold and silver rallied, so did sugar. Although sugar had a bigger move in 76 after the oil shock, sugar went up to 60 cents a pound or 66 cents a pound. Then it came all the way back down. And then in 79, it started to rally and it went to like 45 cents a pound. So it wasn't quite as spectacular what silver gold did, but it followed in kind. And the reason why was because when you get into these massive inflations, everything gets more expensive. So people reach for things that are generally processed in the way of food, regardless of the diet consciousness. And by the way, the diet drugs, that's a whole other story. But even so, I mean, maybe except for that population, especially as we go global, sugar is the go-to. People buy it. and they buy it and hoard it when times are rough. So that's kind of where I come from with the sugar. I know that Coca-Cola is going to include cane sugar. I don't really think that's done very much for the market, but that's, to me, it's a psychological barometer of the stress of inflation and how inflationary are we. And right now, sugar's come off a lot, hitting right at that 80-month moving average, by the way. So we're getting into massive support underneath the 6-month calendar range high, which corresponds perfectly with the 50-day moving average. So basically, what I would say right now is I don't really care about sugar until it does something. And what is that going to do? It would be a close over $16, 16 cents, 16.7 cents a pound. On top of the energy space, if all of that starts to go, I think we can have our stagflation conversation a little bit more, with a little more certainty than right now. I'm still not 100% on that.
Yeah, I'm in the same spot. It's just got to be patient right now, and that's one thing you say so much, which is you just got to be patient. Reminds me of my grandmother. She would always say, say patience never seldom held by a woman and never by a man. And she would tell me that all the time. It'd drive me crazy, but at the end of the day, she was right. And absolutely, as a trader, we need patience more than everything. Mish, I want to thank you so much for your time. I know you have to go. I do as well. This was a blast. Thanks for coming on. I'm sure everybody enjoyed it.
Thank you so much for having me. And thank you guys in the back there.
All right. Thank you guys so much.
Bye, Jason.